Greetings, members one and all of the Salivation Nation. Is silver poised for a comeback? Let's find out. Silver has been making some movement upwards as of late, and it's some modest gains, but it's now over $16 an ounce, which is quite exciting considering how stagnant silver's been for quite a long time. And some are wondering if perhaps this could be the beginning of something very good with silver. You know, the silver to gold ratio is tightening up a bit. Right now, as I record this, it is at 88.37 ounces of silver to buy 1 ounce of gold. And some are saying that perhaps if silver makes a move, it could move up to $20 an ounce if gold climbs to $1,500 or more. It's not sure. This is from Market Watch. It talks about how silver futures marked a 5th straight day of gains session on Thursday for the highest finish in more than a year. Tight supply concerns along with the strength of gold may help lift prices for silver back to levels not seen since 2016, about 3 years ago. We're overdue for a rally in silver as the gold to silver ratio was sitting near historic highs, about 27-year highs, says Chris Gaffney, who is president of the world markets at TIAA Bank. Silver has some catching up to do, as it was left out of the overall rally in precious metals during the first half of this year. Its most active September contracts are up 2.47%, settled at $16.19 an ounce on Thursday, up 22.7 cents. It's the highest finish since June 29th of 2018, according to Dow Jones market data. Precious metals posted gains in each of the previous 4 sessions and trades nearly 6% higher so far this month. Year to date, however, silver based on the most active contracts have climbed by 4%, underperforming gold at 1.65%, which has seen an 11% rise so far this year. The world silver miner Fresnillo PLC recently cut its output targets for this year. It expects to produce between 55 million ounces and 58 million ounces in 2019, which is down from previous expectations for a range of 58 million to 61 million ounces. That fed concerns over tighter supplies and helped to fit the price of silver, said Gaffney. Meanwhile, the gold to silver ratio has been an extreme level from historic perspective, with silver lagging gold significantly for many years. The ratio has several ounces from the 100 mark, which means it would take 100 ounces of silver to buy an ounce of gold. But, you know, it's back to 88 ounces of silver to 1 ounce of gold. A near-term key for silver will be if gold breaks above $1,450 an ounce, and if gold moves to $1,500 and above, it will send silver up and test its next technical level at around $20 an ounce, he said. Silver futures aren't traded at levels since 2016. The really big gains will be from the silver miners like First Majestic Silver Corporation and Opportunities have been showing up for other small capitalization miners like Fortuna Silver Mines and Endeavor Silver Corporation, said Spina, adding that he's been accumulating many of these juniors over the past several months in anticipation of them doubling, and much more as silver makes a move towards $20. He said gold and silver investors have not missed much of this rally, though in the short term the rally may be overextended when it comes to some miners. Over the coming months and the year, however, Spina believes that he sees one of the best risk opportunities for the gold-silver sector since he started buying juniors as a teenager. So there you have it. It's interesting to see where things are with these prices. Right now, silver's at $16.37, well above that $16 level, but gold is up $21 to $14.4676, so it's pushing closer to that $14.50 level. Now, as we see times like this, when the prices move up, where people get pretty bold with their predictions, and I'm not going to go there. Although the times that I've made predictions before where I've been very wrong, I've been right other times too. But I remember, I think it was last year or the year before I predicted $20 an ounce silver, but it was a very lighthearted prediction. I don't bank any of my predictions or take them very seriously. So, as to whether or not it makes a move up there. But regardless, you shouldn't take anybody's predictions seriously. You shouldn't buy based off of what people think the markets are going to do, because it's really impossible to predict. If no one has a crystal ball, so we can only perceive what the price will be based off the movement of the markets. So many different factors come into play. Psychology being the most unpredictable, but short selling, trading, manipulation, all the different things that aspects are involved in it. And natural economic forces that come into play, the health of the economy, have geopolitical factors that come into play in all this, and the fact that silver now you would be unwise to make predictions to see what is going to happen with the market down the road with silver, because I do believe that part of the reason for the stagnation is probably the same as we saw in the 90s and early 2000s. And that is, people aren't paying much attention to it because they see it really more so as a commodity. You think about it, in the 90s and early 2000s, it was used a lot in the industrial sector and biomedical technology. Even more so today. It's even more widespread. It's more diversified in its uses, which is a great thing. The metal is needed for that type of thing. But because of that, it is seen more as a commodity, and it's reacting more as a commodity. And commodities are down right now, which is kind of odd considering by some other measures, inflation is taking hold and taking root, and the dollar is still losing value each year based off the rate of inflation. It's not having that effect on silver that we think it should have. Because silver is not seen as that hedge that it maybe had been a few years ago. And I think that's kind of, to some extent, sort of a reason why the prices were kind of stagnant in the 90s and early 2000s. We're seeing a repeat of that. Things could change. It could make a move upwards. It could break out. These ratios very well could tighten up, and I believe they will in time. It's just going to take a while, overall in the grand scheme of things. But I believe that silver is something definitely to look at, and we may see something. But I don't know that these targets that this article talks about are realistic or not. I think they're just numbers thrown out there. There's not really much reasoning put behind them as to why those could be. But even if the ratio stays at 88 or tightens just a little bit more, the fact that it's going up, I think, tells us something. I believe now, where it is at or a little bit above the level of inflation. Probably right at, I don't know. We'd have to kind of take an in-depth analysis to see what the level of inflation would match with the price of silver. With a 100-year chart, 100-plus year chart, if you look back to the very first date of it, it was around $15 an ounce. But you'd have to average that out and take it into account to see where that is. It's almost a moot point to some extent because it fluctuates and there's different measures of different things and how things are perceived in the marketplace. And as far as calculating value based off of region, based off of fuel prices, based off of a myriad of different factors, we all can do our own anecdotal analysis. In fact, people talk about, gas, bread, milk, and all that type of stuff. If you were to cash in a silver for those things, you'd probably come right around even on those. And then really, that's probably the best level, how they measure CPI, Consumer Price Index, the rate of inflation, the studies for it, are the necessities in life, food, housing, lodging, and all the different aspects that are tied to it. Regardless, we'll press on, we'll move ahead, and we will see. But this could be the beginning of a breakout in silver. And it could be, by the way, when I say breakout, I'm talking about it could be the beginning of something new where silver maybe not necessarily will tighten up with gold as far as the ratio is concerned, although I think we will see it tighten up a little bit, but not as much as some of us would like. However, I do think it will be a time where silver is finally moving along with gold, the price movement upwards. And, of course, when that happens, people will start to get excited about it again, which is definitely a good thing. As to the reasons why, well, we've talked about that in the article too, but I don't know how much we can substantiate based off of that as to whether or not that's something that's going to be long-term or calculable down the road. But nonetheless, it is exciting to see the prices move a bit upward, and just like it is with gold to see it move upward. Are they artificially high? Could they go back down? Sure, they sure could. Both of them could go back down. In fact, people, when you look at the grand scheme of things, and I'm not saying that it will necessarily happen this way, but it's quite possible that if they were to go down again, if gold and silver were to get crushed, let's say, in the next week, or there's some great reports, economic reports, or trade deals come through, the Fed decides not to cut rates or something like that, and both gold and silver gets crushed, there is a possibility that we could see the ratio between gold and silver continue to tighten. I don't know. That's something that's not necessarily out of the realm of possibility. So keep that in mind as we explore these things and continue to press on. But we'll see what happens with the silver. Post your thoughts below. Would like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.